Okay, let's talk about 2025. In the world of high finance, it was a year that really drew a line in the sand. You had the giants of Wall Street basically building fortresses, preparing for anything, and at the same time you had Asia's powerhouses looking at a map, but they were drawing up plans for conquest. This is really a story of two completely different ways to win.
So the big question isn't just about who came out on top with the best numbers. The real story is in the how. What were the playbooks they were using? How did these titans of finance, from Wall Street to Asia, end up with such different strategies for navigating and really thriving in such an uncertain year? Let's dive in and break it all down.
All right, so who are the players here? In one corner, you've got the Wall Street fortress with the legends, Morgan Stanley and Goldman Sachs. And in the other corner, you have the Asian ascent. We're talking about China's national champions, CITIC and CSC, alongside South Korea's incredibly sharp digital innovators, Mirae Asset and CITIC Securities. 6 massive firms, but 2 fundamentally different philosophies on how to play the game.
So first up, let's unpack the American strategy. You know, when faced with a really volatile market, their move wasn't about aggressive expansion, not at all. It was about de-risking, consolidating, and building what you could call an impenetrable financial fortress.
I mean, just look at this number for a second. Over $7 trillion in total client assets at Morgan Stanley. Now, this isn't just some big, flashy number. It's the direct result of a very deliberate, very strategic pivot towards the steady, predictable, and frankly, massive engine of wealth management. This is the bedrock of their fortress. And if you want to see how they built that fortress, well, this chart tells the whole story. Wealth management now makes up almost half of Morgan Stanley's revenue. This shift is absolutely crucial. This huge slice of the pie represents stable, recurring, fee-based income. It basically acts as a giant shock absorber, protecting the firm from the wild swings you see in traditional trading and investment banking.
So this is really the core of the modern American playbook. It's all about building resilience. Both of these firms spent 2025 de-risking. Goldman Sachs, for instance, famously refocused on its institutional core after stepping back from its big push into consumer banking. The goal for both? Create a smoother, more predictable earnings stream and build a financial fortress that can stand up to pretty much any economic storm. Okay, now let's hop over to Asia, because the story here is completely different. While Wall Street was busy digging moats and reinforcing walls, Asia's titans were looking at a world map. Their strategies were anything but defensive. They were all about conquest and consolidation. You know, this table from the source report is a fantastic way to understand the different levels of ambition we're talking about. Up at Tier 1, you have the true global resource configurators, like Morgan Stanley. These are the firms that can price risk and move capital anywhere, anytime. Then, down at Tier 2, you've got firms like China's CITIC. They're building truly integrated global networks. It's way beyond just opening a few offices here and there. And then you have Tier 3, where we see these incredibly effective, but much more focused regional power plays.
Now in China, things get really unique. The strategy for firms like CITC is closely aligned with national goals. They have this model called investment bank plus investment, and it's specifically designed to fund what the country calls its new quality productive forces. So think advanced manufacturing, green energy, AI. Finance here is literally a tool for national industrial policy.
And is that strategy working? Oh yeah, absolutely. Just look at this explosive growth in cross-border activity for CITIC. Trading volume from qualified foreign investors, that's international money, jumped over 162%. They are successfully bringing in foreign capital to fuel their domestic priorities. It's a perfect fusion of global finance and national strategy.
Okay, so what about the South Korean firms? Well, they took yet another path. The best way to think of them is as digital raiders, right? They aren't trying to conquer the entire world all at once. Instead, they're using incredible technology and targeted acquisitions to move into high-growth retail markets with absolute surgical precision.
And here is a perfect snapshot of that strategy in action. When Mirae Asset went out and bought the Indian retail broker Sharekhan, they didn't just get a company. They instantly acquired 2.85 million clients in one of the world's fastest-growing economies. This is a textbook example of that single-point breakthrough we saw back in the tier table. Just brilliant.
So there's one common thread that ties all of these different strategies together, no matter where you are in the world, and that's technology. In 2025, things like AI and digital platforms, they stopped being just buzzwords you'd find in an annual report. They became direct, measurable drivers of profit and loss. This was the year that tech really started to matter to the bottom line. And these right here, these are the flagship weapons in that digital arms race. You've got Goldman Sachs with its marquee platform, China's CSC has North Star, and the Korean firms are absolutely crushing it in retail with super apps like M-Stock. But here's the key. They all serve fundamentally different purposes.
On one hand, you have Goldman's Marquee. You should think of this as the ultimate institutional toolkit. It's built for the most sophisticated hedge funds and asset managers on the planet, giving them elite-level analytics and data. This is technology designed to superserve a smaller number of very, very high-value clients, reinforcing that core institutional identity. And then, on the complete opposite end of the spectrum, you have something like Mirae Asset's M-Stock. This thing is a weapon of mass acquisition. It's a retail super app built to attract millions of individual investors, with killer features like 24-hour U.S. stock trading and AI-powered research. The strategy here is all about massive scale, incredible efficiency, and deep market penetration.
Okay, so let's zoom back out. When you put all these pieces together, the strategies, the technology, the different ambitions, what does this new global financial landscape actually look like? Well, what we see are titans who have been totally transformed, each one adapting in a way that is perfectly suited to its home turf and its global goals.
It really boils down to two different core philosophies. Wall Street is playing a game of model-driven capital efficiency. They are obsessed with profitability metrics like return on equity. Basically, how much profit can we squeeze out of every single dollar of shareholder capital? On the other side, Asia's giants are playing a game of compliance-driven, prudent expansion. They're focused on strategic growth, gaining market share, and often doing it all in lockstep with national priorities.
You know, the HDIN Research report that all of this analysis comes from, it sums it up perfectly. It highlights this strategic split, but it adds a really important point. It notes that in the super lucrative and complex worlds of wealth management and derivatives, quote, the technological moat of U.S. investment banks remains deep. So, look, the big takeaway here isn't about crowning a single winner for 2025. It's about recognizing that we're seeing a permanent structural change in global finance. The game has evolved. True strength, real institutional resilience, it doesn't come from just being big anymore. It comes from strategic adaptation, from having the right playbook for the right battlefield. The real question going forward is, which of these playbooks is going to prove to be the most durable?
Now, this has just been a high-level look at a really complex global shift. If you want to dive deeper into all the data, all the analysis, you can read the full 2025 Global Securities Industry Audit over at www.hdrnresearch.com.